This week, prepping for inflation and an uncertain economy with a reverse mortgage. Welcome back to the Industry Leader Update. Why reverse mortgages are more important than ever before, especially during an economic downturn. That's our topic today. Much damage has been done to the U.S. economy in the last 2 years. The COVID-19 pandemic, coupled with shutdowns and central banks' efforts to help stimulate the economy, have left the world's financial markets and also countries on the precipice of a deep recession or possibly worse. Just as economists in 2007 did not see the signs of the 2008 financial crisis and housing collapse, today most economists are still predicting a quote-unquote return to normal. However, one man sees things differently. Ray Dalio, a billionaire investor who founded one of the world's largest hedge funds, predicted both the 2008 housing and financial crisis and also the fallout from the coronavirus pandemic. On CNBC's Make It, Dalio warned that a new economic collapse is just over the horizon. And such a prediction may not be as far-fetched as one may think, especially with Russia amassing troops for a possible invasion of Ukraine and China's repeated threats to invade Taiwan. War is an expensive business and one that will cost an economy dearly. With inflation already at a 40-year high, Americans are now beginning to feel the brunt of price hikes and supply shortages. And also, should the Federal Reserve actually accelerate their interest rate hikes further than planned, the financial markets are likely to fall substantially, and that would leave retirees in a precarious position. Amidst that doom and gloom scenario, there does stand a glimmer of hope for older homeowners and retirees: the reverse mortgage. While generally dismissed by financial planners and the media, and also being misunderstood, reverse mortgages could actually be the saving grace for retirees who find themselves with diminished retirement savings in a down market or a sell-off or being pinched by inflation. How much equity are older homeowners sitting on today? The answer is $9.5 trillion, according to the National Reverse Mortgage Lenders Association and RiskSpan's Reverse Mortgage Market Index. In fact, that figure actually increased by 8.3% in 2020, thanks to rising home values. As one investor said, you only make money in markets that you get out of in time. Well, financial professionals will tell you that attempting to time the stock market is also a fool's errand. But what about timing securing your fallback position or fund before home values fall? Securing access to loan proceeds before you find yourself in a cash flow crisis is much like buying an umbrella before a rainstorm. And that's precisely what qualified older homeowners could do today by taking a reverse mortgage with today's low interest rates and also high home values. And those who have little or no outstanding mortgage balance can actually secure access to an open line of credit in the reverse mortgage. And with a federally insured reverse mortgage, unlike a traditional HELOC, that line of credit cannot be reduced if home values should fall. Retirees can then take periodic withdrawals as needed to either offset the effects of inflation or losses in their retirement portfolio in a market sell-off. Now, many chuckle at preppers or survivalists who prepare for a worst-case scenario. I've been one of them myself. That is, until a crisis hits. With today's uncertain economy and the stock market poised for a reset, reverse mortgage is truly a loan of prudence. Perhaps prepping for an economic crisis is the prudent course of action. And also, the days of treating a reverse mortgage as a loan of last resort may no longer be in vogue. So, even in best case scenario, those who have secured a portion of their home's value stand to have financial flexibility in the future, and they will be prepared for the hard times that may come. Now, what are your thoughts on using a reverse mortgage to prepare for an economic crisis and inflation? You can share your comments below. And speaking of sharing, please share this post with other mortgage professionals. You can do that on your LinkedIn, Facebook, or Twitter accounts. Also, please subscribe and watch our past episodes on our YouTube channel, Heckam World. If you just search for that, you'll find us. And each week, we're going to be curating the news that matters most to you as a reverse mortgage professional. And our weekly podcast, Heckam World Weekly. You can listen at HeckhamWorld.com or also subscribe and listen on iTunes. Thank you for joining us and have a great week. Until then, happy originating.